Hello friends. Friends, we are going to continue with share capital, and we are going to do a small topic, that is issue of shares to promoters and underwriters. This is a very small and simple topic. I won't take much of time on this, right? Now, first of all, let us say promoters. Who are the promoters? First, you should understand that who are the promoters. See, when you are setting up a business, there are a lot of legal formalities that are to be completed before starting a business. Before starting the production process, before starting the business process, there are a lot of formalities that are to be completed. Right? Now, what happens? We hire some persons to complete those formalities on behalf of our business. Right? So, what is there? There are some legal formalities or any kind of formalities. Mostly there are legal formalities only, right? Legal formalities before starting a business, right? What a businessman will do, he will hire people to complete formalities, right? You are a businessman, you do not have enough time to complete all the formalities, right? So what you do, you hire people to complete formalities on your behalf to help you in setting up the business process, right? So these hired people are known as promoters. So promoters are the people who help in the incorporation of a business, help in the setting up of a business, help in completing the formalities of the business before its start. Right? Now if you are hiring the promoters, they will charge fees also. They will charge fees to work on behalf of the businessman. You are hiring people, these people hired are known as promoters. They are helping you in setting up the business. They are helping you in completing all the formalities that are required to start the business. Now they will not work for free. You can't say that my business is not started, so you do work for free of cost. You can't say that. They are doing the work and in return they will charge fees. Clear? Now this topic says if they are charging the fees, we call this fees as, in the normal course, in accounting term, we call this fees as incorporation expenses. We take this fees into incorporation expenses. That is expenses which are incurred to start the business. Incorporation means setting up a business, start a business, right? So any expenses that have been incurred in setting up a business, these are known as incorporation expenses. Any expenses incurred till the start of the business are the incorporation expenses, right? So promoters are completing the formalities, are helping you in setting up the business. So they are working before the start of business, right? So these are the promoters, they will charge fees. This fees is called incorporation expenses. Now in normal case, how will you pay this fees to the promoters? You will obviously pay this fees through check or through cash. What will be the journal entry for this? You will say incorporation expenses account debit, because it is your expense to say bank account, isn't it? This is how you will be paying fees to the promoters. The incorporation fee you will be paying to the promoters through bank. The journal entry will be incorporation expenses account debit to bank account. Clear? Now, what we are doing in this case is we are not paying them through bank. What we are doing is, instead of paying them through bank, we are issuing them the shares of the company. What is the journal entry for that? Incorporation expenses account debit to share capital. Right? So instead of paying promoters through bank, what we are doing is we are issuing the share capital to the promoters. Clear? What we are doing is we are issuing the share capital to the promoters. You might say that they have worked, they should get cash. See, if they are getting the shares also, they can anytime return the shares and get their cash. If a promoter is not in the need of the cash, he can take this share capital of the business. Right? It is beneficial for the promoter only. Because if the shares of the company grows, then he will be at the benefit. Clear? So issue of shares to promoters is clear. Who are the promoters? The persons who are hired to complete the formalities on behalf of the business, who help in setting up the business. They work before the business is started. Right? Those persons are known as the promoters, and for their services they will obviously charge some amount. Whatever amount they will charge, that is known as incorporation expenses. That is, expenses incurred before the start of business are known as incorporation expenses. Right? In the normal case, we will pay incorporation expenses either through cash or bank. But in this case, we are not paying through cash or bank. We are issuing the shares to the promoters in lieu of incorporation expenses. Clear? This is one simple entry in case of issue of shares to promoters. Now, second point. Second is underwriters. Now the question is, who are the underwriters? Right? These are the persons who enter into a contract. These are the persons who enter into a contract with the company that in case of undersubscription, of shares, they will subscribe to the remaining shares, right, and will charge commission for this. Now, who are the underwriters? Underwriters are the persons who say that in case there is an undersubscription of the shares, that means the public do not subscribe to the whole of the issued shares. You issue 10,000 shares, public subscribed for only 8,000 shares. Now the remaining shares are 2,000. So underwriters say that if in case there is an undersubscription of shares, there is undersubscription, right? There is an undersubscription of shares, then to the extent of undersubscription, that is 2,000 shares, they will subscribe to that. but for that they will charge commission from the company, right? So underwriters are very intelligent people. They say we will buy your shares to the extent they are undersubscribed, plus in addition to buying those shares we will charge commission from you, right? Now if you are paying commission, you will either pay through bank. First of all, when the commission is due to the underwriters, suppose the underwriters subscribe to it, the commission is due to the underwriters. What is the journal entry for that? Journal entry for that is underwriting commission account debit to underwriters account, right? What is this? This is commission due to underwriter. Clear? So what is the journal entry for commission due? It is underwriting commission account debit. Why it is debited? Because that is an expense for the company, and credit will be given to the underwriters because they are the creditors of the company. There is a liability of the company, so the underwriters will be credited and underwriting commission will be debited because that is an expense for the company, right? This is commission due on underwriting. Now in the normal case, when you will be paying this commission to the underwriters, what will be the journal entry? If you are paying this commission to underwriters in the normal case, what will be your journal entry? Underwriters account debit to bank, right? Underwriters to bank. What is the net effect of this? This underwriters will be cancelled with underwriters. The net effect of this journal entry will be underwriting commission to bank. Your expense will be debited and there is a cash outflow, so it will be credited, right? So this is the journal entry in normal case. But here what you are doing is you are not paying the underwriting commission through bank. So this will not be the journal entry. Your journal entry will be underwriters. You are issuing the shares instead of paying through bank. For underwriting commission, you are issuing the shares to the underwriters instead of paying through bank. So this is a simple journal entry. You will pass underwriters to share capital. The net effect of this journal entry will be underwriting commission account debit to share capital. Clear? So who are the underwriters? What is the role of underwriters? Is this clear? These are the persons who enter into a contract with the company that in case of undersubscription of shares, they will subscribe to the remaining shares, and for that they will charge commission. Now if you have to pay commission to the underwriters, for the commission due, the entry will be underwriting commission account debit to underwriters. Why? Because underwriting commission is your expense, so expense will be debited. Underwriter is your creditor because it is your liability, so it will be credited. Now when you are going to pay this commission to the underwriter, your journal entry in normal case will be underwriter account debit to bank account. But here in this case, we are not paying through bank, we are issuing the shares to the underwriters. So journal entry will be underwriters account debit to share capital account. Clear? So this was a very simple topic, very small and simple topic, right? The question, the probability of getting a question from this topic is less, right? Because there are other important topics in this chapter, right? But we have to cover every topic. Okay. So friends, if you have any queries, just send me an email at ksjteaching@gmail.com, right? In the next lecture, we are going to start with a very important topic of share capital, that is forfeiture of shares. This is a very important topic of share capital. See, there are 2 or 3 very important topics. One was oversubscription of shares, and the second is forfeiture of shares. So you need to be extra careful about these topics. Oversubscription and forfeiture. Right? These are 2 very important topics of share capital. I will go slow with the forfeiture. Right? So in the next lecture, we'll be starting with forfeiture of shares. So that's all for this lecture, friends. Thank you so much.